Senor Ortiz, episode 3, Administrators. We are live. Are you ready to do this, brother?
I sure am, KT. Let's do it.
Let's do it.
Welcome to the Administrators Podcast, featuring your host, Mr. Kendrick Thomas, and my co-host, Mr. Jose Ortiz. This information is used for educational purposes only.
Oh, one, man. I almost sound like it. Do I sound like the what's name again? Or do I sound regular? Am I good? What it do, KTTV? This is KT, and I'm coming at you live with another episode of the Administrators Podcast. This is episode 1, 2, 3. Episode 3. Jose, how you feeling tonight, brother?
Man, I'm feeling good today. You know, we had a little day off today. For those who know, you know. Today was a day off.
I want to give a shout out to everybody that went into the making of Thanksgiving that give teachers this week off. Thank y'all so much. I am very thankful for that. Shout out to you, Jose. That was a good point, man. That was a great celebration to start this thing off with, man. Sound like we in a team meeting here. Hey, look, man. We are here, another episode of the Administrators. Shout out to everybody that's been tuning in all of the weeks, that's been giving us feedback inside of the comments, that's really been taking everything to heart. We always try to say the main goal of it is to really break down and demystify the world of investing, the world of stocks, understanding that there's so much jargon, there's so many keywords, there's so many phrases, there's so many things that go to it, that it can make you almost frozen in fear and make you don't want to do it. So here, what we're trying to do, once again, is just break this thing down to 101 small pieces so that we can get that content in. You got anything to add to that, Jose?
No, thank you to everyone who's so far participated with us, following us on our journey as we're getting everything started. And hopefully, we make this change together. So let's get to it.
Hey, you got to make this change together. That's one thing about it, man. So like when you think about being able to hustle, man, and you look at making $100 a day, or you look at making $1,000 a day, a lot of people don't believe that it's real, right? But I'm here to tell y'all, if you move it around and let it compile, $1,000 a day is very, very easy, right? And so then you start getting mad when you don't make $1,000 a day. So that's what type of life that this can have. But you got to stay focused, you got to stay grounded, and you got to stay consistent. And so that's why I always say teachers make the best investors, because we are consistent. But the biggest of all is we are patient. If you're thinking about what we do with 30 other people's kids every day, or if you're an administrator and you think about working with 800 other people's kids every day, we have the patience, right? We have the consistency. So we got the key foundational tools. And so that's why our goal is always to bridge that gap between the stock market and the classroom, right? And so here we are, administrators. Man, I think let's get into some news, man, and then we'll get this thing rolling. You ready for that? Let's do it. All right, so in today's news, what we have, if you have not learned who this guy is, this man is named Sam Altman, right? So he is the CEO of OpenAI, and that is ChatGPT. And so in this picture, what he's doing is speaking to the media about one of the statements that he said. And so I wanted to kind of highlight this for all my entrepreneurs, for all of the people who are leaders. He says that successful people believe in themselves almost to the point of delusion. And so he's saying that, here we go, organizations should be very frightened of having a CEO who is delusionally overconfident, is what Don Moore says. But Sam Altman says that, what do you say? Hold on, wait a minute. The circumstances around it, blah, blah, blah. Self-belief is immensely powerful. The most successful people I know believe in themselves almost to the point of delusion. So the reason why I brought this guy up inside of the podcast tonight is this morning he got fired from OpenAI, which is ChatGPT.
Mm.
Microsoft said, okay, we will pick him up. So all of this happened before the market opened. Today, after this news, Microsoft hit an all-time high, right? And so when you're thinking about the work that he's done at OpenAI, ChatGPT, which I love, we all use, how much do you believe that his self-belief incorporated him into creating all-time highs for Microsoft today, Jose?
Man, listen, this guy, when he came out with this idea of this, open AI and that chat and all that, it was a big deal that other people got into trying to, copy and duplicate what he was doing. So you got several companies out there, including Microsoft, who were trying to capitalize on his new way of thinking when it came to the new age of internet and technology. And so for him to believe in himself, that much and believe in what he could offer to any company, not just the one where he was currently at, says a lot about his character, about what he believed in himself. And so when you have something like that you want to give to others or share with others, or even you think back a long time ago, Einstein, when he did all that, you got to have that faith in yourself. And with that, when you talk that way, you build that confidence. But now you just got to go out there and prove to everyone that he was right. And so I think getting away from that company and joining the team at Microsoft, not only was Microsoft already trying to head in that direction, but now they got one of the big top dogs who is already spearheading the movement. And so now, no telling what other members of that team would come to Microsoft as well. And to speak to what KT said about Microsoft, $8.45. We did a 2% move today. A lot of it happened in pre-market. We dipped at the open, and then it just took off. 9 o'clock. It was riding high today, baby. So
Good.
Microsoft was on administrator's Instagram not too long ago. We were talking about that. So congrats to those who had it. Congrats to everyone who's been in it. And KT, I still got mine. So got a couple options don't expire till January. So we find out how
hold on, wait a minute. Who did? Shout out to me, Perry, for popping in on. Hey, that girl, stay with it. Look at me, Perry trying to get rich over there. That's why I'm probably. If you don't have your notepad out, make sure you got your notes out, because this episode here, I'm excited about it because when you learning how to trade stocks, one big piece of trading in stocks is understanding risk management, right? And so how much are you willing to lose? Because every trade will not be a winning trade, right? And so then what happens is, how do you minimize the amount that you lose so that when you do get ready for that winning trade, you still have capital to be able to put in? I was telling Jose a little bit before we got on the screen, I used to do a 20% risk tolerance, right? So that means if I bet or put in for my lot size, which is how much I planned on putting on the stocks, if I put in 2,500, right, for one situation, now I'm out of 500 just if I was a bad call. And so then I had to kind of learn a little bit more about that and look at risk management. Now I think, Jose, if I lose 250, I'm gone.
Yeah.
And that's it, And so while that did help me on some trades of not getting out too early, and I was able to see some profits, overall, when I did hit those bad trades, we're talking about $800 to $1,000 in 2 trades per day, right? That I would lose. And so it's all about tonight is risk management. How do you set up that risk management? We'll look a little bit deeper into the Robinhood. And tonight, so last week we did a little surface level on the Robinhood. We talked a little bit about the movers. We looked at how to buy your calls, how to buy some stocks. But tonight we are going to go deeper into all of the educational tools that Robinhood has. So make sure, if you do not have your pen and paper out, you do not have your Robinhood app opened up, then make sure you get locked in as we go through the show. because that is what you're going to need. We didn't put a lot of the other segments in tonight. Simply those two, where we'll go through risk tolerance, we'll go through Robinhood, and so I want you to be able to get some of that meat tonight. Take it away, kind of put it into your plans, your portfolio, what you're doing, and then come back and share with us how this was able to help you. So, without further ado, what we'll do is take a little quick break. Then when we get back, we're gonna get Jose to pull up the Robinhood, and then we'll talk about our platform research. We'll be right back.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the
All right, let's get into some platform probing, brother. All right, y'all, welcome to the platform probing section of the Administrators Podcast. And so on this section, each week, we're going to take a platform that we talked about. So if you was with us on episode 1, we talked about Webull, we talked about TD Ameritrade, we talked about Robinhood, we talked about Merrill Lynch. And so all of these are platforms that allow you to trade stocks, right? And so as we go through them, we want to go take a deeper dive in to show you each platform to help you as that first-time investor make the best decision for which platform you want to use, for which platform gives you the best knowledge, and which platform is more user-friendly. And so last week and this week, we're going to be talking about Robinhood. And so Jose put the BAM. Wait a minute. Oh man, I thought you put the Robinhood in there, man. What happened to the Robinhood? Come on, man. Look, we talked about the Robinhood. So what we'll do is for individuals venturing into the stock market the first time, Robinhood offers a tailored learning experience through its Investing Stocks 101 resources. And so what we'll do tonight is look at this comprehensive program as it's designed to empower beginners with the knowledge and skills needed to navigate the world of stock investing. So what we'll do is we'll go through a quick overview, and that way we'll discuss some of the pieces that you can use as you get ready to learn Robinhood and learn investing. So without further ado, Jose, can you share your screen, put a little bit of that Robinhood in our life?
Yeah, can y'all see that?
Not yet.
Oh man. Okay. I thought it was there. All right, what about now?
Okay. Add to the stage. Yep, we got you. Can you see it?
All right. So everyone, good evening. So this is the account, my account. So when I go over here to the account, I look up the different things on the side, and one of them becomes this little help button. Once you get to that help, you see the different offerings that it has on this page. And so what we're going to do is we're going to go right here to this help center. Now this is very unique to Robinhood. It kind of helps all the young investors, all those who are new to the world of investing and trading. And once we get to this page, hello, how can we help? We got a couple things we can look at. So we go to this top. We got right here where we can do this learn. So we're going to go ahead and click on learn. So this is in my Robinhood support at the top, Robinhood. We're going to go to learn. And here we go, investing 101. So for anyone who do all of this is a great place to start. Once you get into your Robinhood account, you can look to see different things that are going on in the world of investing and how to participate and get your money right. So
now, where are you? Because on the screen right now, it's only showing the black screen with your name on it.
Oh man! Okay. So let me go back out.
So I remove, and then once you once you reshare, let's reshare it and see if it'll go in.
All right.
Bam. There we go.
Everybody see?
All right. Okay, so what I'm gonna set the stage for them real quick. So this part that we're going into is a little bit of the foundational learning. And so it's investing in stocks 101. And so if you go inside of your Robinhood, like Jose said, you hit the learn button and it says investing in stocks 101. And it's so nothing but that learning resource for people who want to take those initial steps into the stock market. So in this section with Investing 101, if you are a new beginner, if you're trying to learn more, this really breaks down the complex concepts into easy, understandable modules, right? And so as we go through, we'll kind of look at some of these to kind of give you a little bit more information. So Jose, if you can go through some of those in that 101.
All right, so here we go. So the first one, what is an investment? So if you followed us from the beginning, we've been talking about understanding investments, making investments. So if you can see here in this Robinhood page, what is an investment? It takes you through some reading documents on understanding, gives you a takeaway that you can have from reading the article. Go down to the bottom. As you keep scrolling, you can see it goes into more detail. So what is an investment? When you invest, you trade current resources, such as time and money, to acquire an asset. It's all about acquiring assets. That is the genuine term behind investment. That is assets. What types of we talked about stocks, we did talk about bonds. You have other categories such as futures, real estate, certificates of deposit, cryptocurrency options. KT and I trade options a lot. Like we said before, as we go through this podcast, you become more familiar with options trading. How does investment work? You have money. You put this money in to work for you. You get it to where, like KT said before, set it and forget it. How do I start? Well, it's a good thing to start, as soon as you can. With a little bit of funds that you have, the sooner the better when it comes to your overall financial goals. When you think about the time frame that you want to invest, and then where do you go? This is just one platform that we use, Robinhood, but this goes through and tells you what to look for in the overall, growth or whatever of your personal investments. What we also like about this page is that when you go right here, it tells you more. So if you want to go have more information about stocks, bonds, other investments, let me click on this stocks and see if it. So this just takes you down to the bottom where I was. So this is an outline of what it's going to be talking to you about. If you go down to the bottom, we have related articles. What is a portfolio? What is an index fund? Real estate, mutual fund. So this is just area, the first area of what is an investment when it comes to your learn on your Robinhood. KT, anything you want to add to that one?
No, I think that was good. And so I think the next one we'll look at is the step-by-step guides. So Robinhood step-by-step guides, it provides a structured approach to understanding the market. And so beginners can navigate through the intricacies of stock investing at their own pace. And so basically that's kind of what Jose just showed you. And so now I think we want to look at a little bit of the interactive content too. So if you didn't know, Robinhood that goes beyond the traditional learning materials. And so with the interactive content is I think this is where they have like the snacks. And so what Robinhood called their news or small news bites are called snacks. And not only do they just give you the information, remember, we are educators. What we like to do, we're going to give you a little quiz to make sure you understand, comprehend. So if you can go through some of that for us and kind of let us see what that looks like too, Jose.
Okay. Can y'all see this now?
Yeah.
Okay. So here are some examples of snacks, Robinhood snacks. These are little articles that we have down here. We're going to go ahead and look at this first one because it happens to be relevant to us right now with cryptocurrency. As you can see, it's an article that we can look at. Right here, today's market moves. We had the Dow, the S&P. If y'all remember back from when we had that first episode, the Dow Jones, the 500, the Nasdaq, and then we got our favorite Bitcoin. So here's an article or some reading material that it gives you. It talks a little bit about giving you something to read here. Circle I's and IPO as tightening stablecoin market benefits from high rates. Stablecoin is a coin that is distributed by a crypto company in order to match the dollar, cent per cent. So that's an overview of what a stable coin is for the purpose of your reading. As you can see, there's a takeaway here. A smaller slice doesn't mean going hungry when it comes to what this article is about. So as you continue to read through these articles, what KT was talking about was that we also have we did. Oh man.
So is that one of the ones with the quiz?
Yeah, well, I don't see the quiz on this one. Let me see here. Because I know we looked at one before.
Yeah.
That had the quiz. Right here. So when we have an article, here's your article. It gives you something to read right in here. And see where right here now we have a quiz that you can take. Did it show up or no?
No, not yet. You probably have to reshare that.
Yeah. So let me go ahead and reshare the screen.
Okay.
And so can everybody see this now?
Yes, sir.
So this is based on the articles that were there or that one particular article. It gives you a quiz. Educators is what we do. Check for understanding. So here we go with what's the next service Uber plans to roll out. Fill in the blanks. Thousands of garment workers in blank are protesting over lower wages, which sold 70% of those AI chips as high office. So if you keep on going, it's about 7 to 10 questions that they ask you when it comes to those articles on the snack. So now let me take you back to so as you go in, this is under your Robinhood snacks. You have information to read, and then your takeaways from those articles, and then we have different snacks, the form to fill out for the questionnaire. So it does give you information. Robinhood, not only that, but as we stated before, it gives you news. So news, information, things for you to read. I'm going to go back to this page here. Can y'all see this?
Yeah.
Okay, so
Okay.
remember these tools are at your, you can use these to help you understand, different basic concepts of the stock market. So Robinhood is really good about having that information there for you to use. Anything else, KT?
Well, just moving into the so now we got the interactive content. We've had the step-by-step guides. We also got the foundational learning. And when I say foundational, people, we talking about what is a stock, what are the indices. And so the next thing that we want to look at inside of there is the information where it covers how the stock market operates. I think we was looking at a little bit of that. And so it explained the role of the stock exchanges, the concept of the indices, the mechanics of buying and selling stocks. So let's look at a little bit of that here.
All right, so here you go. As we go into that, we talk about this. Can y'all see this?
Yes.
Okay, so what is the stock market? So a lot of people, it's if you've ever been to a market, a farmer's market, you go, you buy goods. You go in there, you want some tomatoes, potatoes, fruits, vegetables, anything that you want from a farmer's market. You go, you take money, you buy it. That's how a stock market works. Buyers and sellers are coming together, and they trade shares of companies. Um, we have companies that are listed in the market. We have people who come in. Uh, we have institutions that invest, that buy and sell, and then we have common folk like us, and we are called retail traders, retail investors, because we don't either do that for a living or we don't work for an institution that gives us capital to go in and buy it. When it comes to buying and selling in the stock market, one of the couple of terms that you'll have to become familiar with in order to do so is called the bid and the ask. Now, when you're buying a stock or even when you're buying an option, there's always going to be a gap in between the bid and the ask. Sometimes it's a couple of cents, sometimes it's a couple of dollars. If it's you don't ever want to go in there and just take what the market gives you, because the market fluctuates so much that if you go in and just look at your bid. So for example, if a stock is $1.45, you can put the bid at $1.45, or you can put it at 144, 140. You can go a little bit lower because it does fluctuate to where it could hit that low price. When you put it at the ask, you're selling the stock. Same thing. You don't ever want to just take what the market gives you. You want to put a little bit higher on it because it does fluctuate. So knowing the difference between a market order and a limit order it's crucial in understanding the bid and the ask. This if I clicked on this, does it tell? Can you see that?
Yeah.
Okay, so there we go. A bid is the price a buyer in the market is willing to pay. So that is what you put in there. Like I said, if you want to make that money, if you want to make it work for you, you never want to go higher than what the bid is already, because they'll get you there, and then you're on a trade that could go sideways because now you got to make up even more money based on what you bought it at. And the same thing with the ask. It's the lowest price the seller is willing to accept. So you want to go higher than what's already in there so you can make a little bit of that money. So we talked about the NASDAQ, all the stock market, the US. The primary function, stock buying, stock selling. Stocks are on the stock market, the New York Exchange. That is where your stocks are bought and sold. It is regulated. It also has market buyers, market sellers, and then we have market makers who go in and buy and trade as well for the sake of keeping the market volatile, or doing its thing as far as the price is going up. What we'll go into later too will be the risks of stock market, because with this volatility, there's always going to be risks involved in the stock market.
Sure.
You have to understand that the market's going to go up, the market's going to go down. A lot of different things. Like today, for example, what KT was talking about with this news, Microsoft was a beneficiary of some news that came out today. The stock market works when buyers and sellers, they are buying and selling from each other and from millions of people on this worldwide or this market exchange. So any little news, anything that happens in the market, we also mentioned before COVID, we talked about this recession that people were talking about, inflation, all these different influence the market. And so you have to be prepared with prices going up, prices going down, executing those trades when you feel you need to. As we go into your risk tolerance, you'll understand what we mean by either holding it or selling it, weathering the storm, getting out completely. We'll talk A lot of people who go in, like I said a minute ago, we are retail investors. If you buy and sell individual stocks through your brokerage without having to be part of a major corporation or entity, we are retail investors. You have your stock brokers. Those are the people that have to have a license that can buy and sell securities on your behalf. Those people are at the stock exchange. There are also managers through Fidelity and TD Ameritrade, Schwab. All those different companies have brokers as well, but most of them are housed at the market to where that's what they do. That's their job. And then we have portfolio managers. Those are people who manage funds, who manage people's funds. Your IRA usually has someone who does that if you don't manage your own. And then, like I mentioned a minute ago, you do have companies like Fidelity and all those that have managers who manage portfolios.
And if you could, Jose, just go through a few more of those pieces to just kind of go into them, because I want us to get into that risk and reward
Okay.
in a few minutes. So I want to be able to kind of look through. But the next thing they have is stock selection strategies, right? So they'll talk about a lot of the risk and reward, understanding the stock market, a lot of those extra pieces. But then picking a stock is the most important piece. And so let's see if they have anything that helps people who use Robinhood go in and just learn how to pick the stock that they want. And so one successful tool that they had, and maybe you can use this as we look for that, Jose, was that search bar.
Oh yeah,
So
right.
yeah, so I know a lot of people are able to, like, let's say, for instance, you're on your phone or you're on the computer, and you are confused about something. Look at how Jose was able to go to the search bar, and then how to approach analyzing the stock. So remember what we just talked about? He was able to go in the search bar, look in Robinhood, and it took him exactly to what he wanted to do. So that's what we're going to look a little further.
All right. So a lot of times when we think about picking our stock, one of the things that KT talked about last time was just, the company itself, the price, what you're willing to pay, all those different things. And so you should have a plan on what you want to do and how you want to pick your stock. Do you want it based on company growth? Do you want it based on the fundamentals of the company? How is it based on your tolerance to risk? How much money you have? Those are the different things that you want to have a plan in place in your head. So when you're looking for stocks and you're deciding how to buy these stocks, you got to go with your plan. So like we just said, if you have a plan on what you're going to do, how long are you going to hold? What is your investment money? What is your time frame? Have a plan and understand that that the prices will go up. They will, come down. It's volatile. Do you plan on holding your stock for a long time? And just it's all about handling that risk. How much money you're willing to put in. But if that trade goes sideways, do you want to keep it long term? And if you do, how much loss are you willing to take before it comes and comes up or does what you want it to do? Now, in this article, they are relating this to buying a car. So when you understand buying stocks is like buying a car, think about the different types of stocks that you want. Everything is different. Think about the purpose of your stock, the purpose of what you want to do. Remember your plan, and how much are you willing to spend as far as your capital in your overall investment into one of these companies. What are you trying to accomplish with that? But understanding companies that you've researched that you want, how do you now choose the one that's right for you? If you want to buy a certain amount of shares for one company versus another company, what have you done to look up those different companies? Thinking about the sectors, we'll go into that when it comes to later on tonight. But just to give you an idea, different sectors, financials, we have technology, we have industrials, where is your company and where do you want to put your money when it comes to the different sectors? Um, so think about that, because not every sector is going to be hot all the time or together. You might have oil and gas, energy companies that are hot, but technology may be down. And so when you research those companies, when you want those companies, think about what it is you're buying. Now, like KT said a while back, he does a lot of dividend stocks that give dividends, and the dividend is, if you hold a stock, the company pays you. It pays out dividends depending on what the company's done financially. And if you are holding one of those stocks and they pay out dividends quarterly or however often they pay them out, you will get a nice amount based on the amount of stocks that you own in your portfolio of that company.
That's it.
So, go ahead.
Oh no, I was just saying that was it. Yeah. So just looking at okay, so now let's go up real quick. So looking at checking under the hood. Hold up, keep going. I want to get kind of into some of those subtopics. So we got checking under the hood. Let's keep going, Jose. For the next one. So checking under the hood is basically, like I say, when you're going to get a car. So let's say, for instance, looking at checking under the hood, I'll give you a specific example. This week, Alibaba, and so that's like Chinese Amazon, right? So they had earnings. Earnings were not good, but nothing happened fundamentally with that company. So Alibaba came down. They were a $99, $100 stock. They are now at $78, right? And I said, oh my God, now it's time to jump on this Alibaba. So I had to really do that research. And so now let's look at Alibaba. What happened with the earnings call? They missed revenue. What happens? Remember when I said last week that trading is filmed around or is held around the news, right? And the factors outside of it. So what's going on in China? China, a lot of problems with the stocks, a lot of problems with the economy, a lot of problems with the shutdown. So then they're having problems. But did anything fundamentally change? Did any of the people that are leaving Alibaba leave, right? They said that they're not going to launch one of their side something where it was coming out and it'll make them more business. They said now was not a good time for that. But why wasn't it a good time? Was it that the program was bad, or did once I looked into the research, I found out the program was not bad, but because we have good leadership, the leadership said, hey, if we put this program out right now, we feel like it won't do as well. So we're going to scrap it, bring it back, and put it out later. So that's why the stock dropped. People didn't do their research. People don't know. Now I found the stock at a resistance. I mean, at a support level. And so now I'm just buying into shares, right? So it went from 99 to 78, right? And so now I'm doing 50 shares. I'm doing 100 shares. And then once this thing goes back up to 100, we're talking 100 times 100, right? And so then, but when we get down here at the bottom, that's when we're saying, looking under that hood, what's really going on with that stock that you want to buy? If it fell, because we buy low, sell high. So if it fell down, why did it fall? Go back in, do your research. If you go back to last week, I talked about some of the top things you should look at when you're getting ready to buy that stock, right? So when you get ready to look at those pieces and you're researching that stock to analyze it, to make that purchase, not only do you have what we're talking about, if you're a Robinhood person, because that's the platform that we're probing, go inside of Robinhood and type in analyzing stocks. It's going to teach you what to do. It's going to teach you how to analyze those stocks. And that way you can have a little bit more insight before you take that leap. And I think what we'll do, we'll stop right there for the probing, Jose. And what we'll do is I want to get into some of this risk and reward, because even when you get that stock, how do you let's say, for instance, with the Alibaba, remember I told you I bought it. My stop loss is at $76. So I bought it at 78. If it goes down $2, I'm going to automatically sell it. That's all I'm willing to lose, right? And so I think what that is, which if you got 100, that's $200. Quick, bam, I'm gone. So that is what that risk to reward should look like. And so that's what we're going to talk about when we come right back. How do you save your money in the stock market? We'll be right back. right, y'all. Welcome back to the Administrators Podcast with KT and my co-host
JoJo.
and boy. We in the building, y'all. So far we did a lot. Like I said, usually we have a few segments for you all. I wanted to kind of keep the news, but in the platform probing, I wanted to make sure that we had a deeper dive into their Robinhood. There are so many tools, and so as we talked about on the first episode, remember what I said? It's kind of like that teacher with that curriculum or that lesson plan. It's not like we're years ahead, like years, and like we could do this in our sleep. No, we're only about 3-4 weeks ahead of y'all as far as with the data, with what we're researching. And so even as we were going through last night and looking at that Robinhood, I mean, we were learning stuff about Robinhood that we didn't even know, right? And so I think that's the way it should be, which is why I was excited to do the podcast, because not only do we get to learn and grow with you all, but we get to talk about the wins and losses because it's not too far off from what we're doing. So when we talk about losses, though, tonight brings us to the meat of the podcast, and we'll kind of finish out talking about risk tolerance, right? And so risk tolerance is how much are you willing to lose as you're trying to swell your money, get your money pregnant. That's what that boy AB saying in Discord. All right, so Jose, man, let's look at a little bit on the let's look at this, man. So we're talking about risk and returns tonight, man. I'm gonna let you take this one away for us, man.
So this slide came from the very first episode that we talked about, where we talked about risk versus return. So risk is any uncertainty regarding the outcome of situations of your event. When it comes to investments, it's the possibility that your investment will fail. And so, like KT was saying, make sure that you have a stop loss, and he'll go into that as we go through this on your investments. And just so you know, moving forward, any investment that you do, any trade that you make, anything that you do in the stock market or bonds or wherever, even in life, there's always risk. Return is making your money and making that work for you. So as we move on, let's talk about what causes the prices to go up and down. As we mentioned before, all of these indicate, some type of price action. Bottom line is anything can make the price go up and go down in the stock market. So you have to understand that anything, news, economic catastrophes, anything can happen to make this market go up and down. All right.
Yeah.
So now,
well, I was just gonna say something on that, Jose. The bond auction was today, right? And so
yes,
if you were holding funds, you had a nice little jump up, right? And I ain't gonna lie to y'all. I told y'all I've been in the TMF, so 20-year, 30-year bonds. I've been buying them up, but with that auction price went up, everything around the market went up with it, right? And so if you were not tuned into the news, if you did not know that this auction was happening, you may have been shorting a stock, right? You could have been in there saying that this stock is going to go down, and you put your money that it's going to go down, not being aware of the news, of the economic indicators. Something like that happened, boom, you just got stopped out of positions that you didn't have to be in because you had something that could have moved the market coming up. So that's why it's so important to be tuned into earnings. You got NVIDIA earnings coming up that can move the stock market because NVIDIA is so strong of a player inside of there. So all of those pieces, man. So just wanted to kind of put that in with it, Jose.
and just to go back to what KT just said, if you tuned in and we talked about that TMF, when we talked about that and when Kendrick first mentioned that, it was sitting right around $4.58. Well, today it's closed at 502. So in 1 week, 50 cents. Now, granted, you had 100 shares. That's $50. That's $50 you didn't have before. If you would have had 1,000 shares, that's $500. So, like KT was saying, if you are not aware of everything that goes on around you, that could be catastrophe, especially when you are thinking about risks for your investments. All right, so let's talk about these risks. So there's different types of risks: market risks, inflation risk, liquidity risks, company risks, and credit. So when we talk about these different types of risks, market risk is just the everyday volatility of the stock market. You have news, you have world events that are happening around us. everything that happens on a given day, financial news, the president speaking, White House, all of that has a potential risk on any investment that you have. When it comes to certain areas of the world that are in more crisis, then that area could also be in more chaos when it comes to your investments. Think about all the different, types of sectors that you can get into. Not every sector is going to be gold or golden every single day, so to speak. Inflation risk. One of the things that we've been battling was this 7% inflation, 8% that started a while back. We are currently at 3.2%, but in the year or so that we've taken to get it down, there has been an extreme amount of volatility in the stock. So understanding that that piece also is a big risk when it comes to your investment and it comes to your trading habits. Liquidity. How much liquidity is in the market? How many people are buying and selling? Sometimes we get into stocks that have a enormous amount of volume every single day to where the price action is incredible from the beginning bell to the end. But then we have those stocks who you may research, you may like, that are moving not as fast as the other ones. So there's not a lot of buyers, there's not a lot of sellers. So we're talking about stocks that may be averaging 500,000 shares or less per day, less than a million. Usually, if you want to get into the liquidity of stocks that are good, you want something that's going to move at least a million in volume every day. If you start getting less than that, then your risk, because one buyer comes in and buys a whole bunch, it goes up. But one buyer comes in a minute later and sells a lot, you're done, you're toast. So that's when it comes to the liquidity of the market being low. You want people to be buying and selling whatever it is that you have. Company risk, like KT talked about, what's under the hood? Are these people about to go bankrupt? Are they making money? What's the problem? Are they coming out with something new type of technology? What are they doing in the grand scheme of things? And then credit. I know there's a lot of talk about our economy, our country being in debt. And now we're talking about companies that go in debt, companies that can't survive the credit increases. They can't survive these rates. So with the rates that have been rising, it is crucial to understand what your investment, how they handle their books, their debts, their payoffs. What are they doing financially so you don't get stuck with that risk? So after those are different types of risks when it comes to just overall market risks. Let's think about the next, your risk tolerance. When you think about what you want to do, and you think about your risk tolerance, and I'm going to drop a link in the chat room before we leave to kind of questionnaire for your risk tolerance. But here's some basic questions that you need to ask yourself when it comes to risk tolerance. Number one, I plan to withdraw money when? If your account is making money, when are you going to take it out? Are you going to hold it? Are you going to keep on investing? If you had an initial investment of $1,000 and you got to $10,000 within 6 months, what are you going to do with that money?
I'm pulling, baby.
And so you have to understand, what is your overall financial goal that you want with this account? So that's one of the questions you need to ask yourself. If you begin making money, what are you going to do with it? All right. So now, once you start taking the money out, okay, so you made your $10,000, you're pulling out money, you take out $5,000. What are you going to do with it? What is the purpose of the money that you're saving? If it's to pay off some debt, are you going to pay that debt off? Because you've made the money now. So now, is that what you're going to do? You're going to go on vacation. So you have to think about what your financial goal is when it comes to this money that you are putting into the stock market. And if you made this money, you can always reinvest that money. You can always keep it in there. You can always buy more shares, buy more options, buy some bonds. But think about, you have to understand what it is you want to do. What is your goal financially for these accounts? All right. So the next one here, I'm gonna give you a scenario.
I would just say,
No, go ahead.
I would just say in the words of the big man, always have a purpose for your money, people. Always have a
Always.
purpose for your money. Any money that's sitting somewhere that's unemployed, is you losing it, basically. Even if it's sitting there full, you still losing it. So always have a purpose. One of the things that I do is if I hit a lick on the options, then at the end of the week, I always transfer. I keep solid numbers around zeros for the next week. So let's say, for instance, I hit $3,000 in 1 week, then I may put 1,500 in my checking account, and then I may put 1,500 into some dividend stocks, and then I start the week back at whatever I started from last week. Even if it's more than that for that week, that's what I try to do. So just making sure that you'll always have a purpose for your money.
All right. So, when you think about the investments, what is your knowledge? Do you have any knowledge, or is it limited? Are you good? Or could you teach others? So you always have to think about that. That's with anything, whatever you get into as a hobby, know what your knowledge is of what you're getting into. And so now we have a scenario that I want to get you guys familiar with. So imagine in the past 3 months, stock market is down 25%. And you have an individual stock that has also lost 25%. What would you do? Think about that, because that's going to determine your risk tolerance. So if you're down 25% on a stock, now remember, what we've been trying to tell everybody is investing long-term, short-term, it's all about your goal, your financial goal. KT and I, 25%, there's some things I might buy more of. There's some things I might get rid of. It all depends on what it is you want to do and what is the longevity of what it is you're holding. So, are you going to sell all your shares? Are you going to sell some? Are you going to do nothing? Or are you going to buy more? 25%, if I'm in a long-term account, if I'm holding stocks or options long-term, and I'm talking about 6 months to a year, I'm going to buy more. Like KT said, though, I've already done my research. I already know what I put my money into, and there's nothing fundamentally wrong with where my money is at for that company. So yes, I am going to buy more. At 25% down, and I'm doing it long term, you better believe I'm going to buy more. But you have to understand what it is you're going to do with your money. That's your money, not my money. So now, if I had an investment, or if I had a stock or an option that expired in a month and it was down 25%, I'm not going to have it no more. I'm
It's
going
gone.
to trade it, get into something different. Maybe the same company, but a different strike price, different expiration date. That's what I would do short term. So, all right.
And so I would just say too, tonight we're talking about risk tolerance. And so probably next episode, we may get into some risk management. And so that's when we'll listen to more of, if that stock is going down 25%, what do you do? Right? Sometimes you can set a stop loss, which is part of the risk management that won't let you get 25% down, but it's all on you, right? So as we talk about tonight, risk tolerance, I want you to know that risk management is on the way.
So the amount of financial risk you're willing to take. So are you willing to go lower than average risk and expect to earn lower than average returns? Are you going to take average risks expecting to earn average returns? Or are you going to go for above average risks to earn above average returns?
I'm going above average, baby.
That is the question that you have to ask yourself, everybody. When you get into this world of investing, when you get into the world of trading, what risks are you willing to take? If you have $500 and you put it all into the stock market, please understand that you could lose it all. Like KT said, there is ways and ways to manage it. There's ways to put that money to good use. There are good options or good stocks to buy. Just remember, what is your risk tolerance? how much can you afford to lose, and what is going to keep you up at night, stressing about what your money is doing when that market opens at 8:30 every morning. If you are stressed or thinking about losing money in the stock market, or if you are stressed about a particular investment that you made, then maybe don't stay in it.
Yeah.
You got to get out. So our next slide, same thing. Would you move your money to a different investment? Would you be concerned moving it into different investments that also, if the decline continues, would you leave your money where it's at, or would you view this as an opportunity to buy more? So the market's down 25% again. This time your portfolio is down and it gives you a number. What would you do? Just think about those things, because those things will happen. If you are investing for the long term, and I'm talking about 2 to 3 years worth of saving your investments, then you may not want to look at the stock market every day. So that might be something that you tell yourself, check on it periodically, unless you're checking it to make a trade, to sell something, to take profits. If you are investing long term, try to not look at it every day, because it's going to keep you stress free. It's going to keep you sane and being able to sleep at night if you do that.
All right. So Jose, we'll go by one more slide, then we'll start landing this plane.
All right.
Oh, matter of fact, let's stop right there. That seems like a good plan, man. So what we'll do is, they always talk about diversify. And so that is another form of risk tolerance, another form of risk management, because mom always told you, don't put all your eggs in one basket. So that's what we'll kind of pick up on next time, is the diversification of the investments, because it's all about building out that secure portfolio to make sure that when the market is going down, all of your money is not going down with it. We may get a few sectors that may go with it, but all of your money should not go with it. And so this is something that we'll look at next time. Can y'all see that? Jose, you see that?
Yeah.
Yeah, so this is what we'll look at next. Woo, look at today. Oh my God. So this is what we'll look at next time, people, because we want to now talk about like the sectors, because I think we're going to add a little section next week called the heat check, because we got some people who is getting real hot, like Nelly hot. Look at over here. What is healthcare doing around here? Because this Eli, oh my God. So y'all, what we'll do, let me get out of there. Get out of there. Quick. Let's get back to the money, y'all. So what we'll do next week, we'll kind of look at diversification of the investments. We'll pull back out the chart so you can see those sectors in real time on what's hot, what's kind of warming up. So that way you say, okay, well, when I get ready to diversify, what do I look at? How do I know where to go? Which sectors are going? Right? Because you don't want to buy anything that is already at all-time highs, correct? And so if you look at places like Microsoft, if you look at places like Nvidia, all-time highs, do you want to buy them right now? No, you don't. So then therefore you go in and kind of looking in and let's say looking at your kind of reds, your kind of pinks, you say, okay, well, why are they turning green? Let's take a deep look in them. And then maybe you think about what's going on with consumers, and you got PG right here, right? Consumers ain't dead, but we got other places that are really taking the spotlight. So we already know consumers will be back. Is that some way I want to diversify? Maybe I can plan for a recession. Maybe I can plan for something. So let's talk about all of those pieces on next week, man. So as we get ready to land this plane, Jose, anything as we close out?
Just make sure that in the chat box, I did drop the risk tolerant survey just for you to do, see what your risk tolerance is. And if you haven't followed us on social media, please do so, because we'll probably be dropping some charts or maybe even some plays this week, because, guess what? Like we said in the introduction, we aren't working this week. So it's time to ride that money train.
Money train. Hey, like that.
We are weird. So if you haven't, and also that map that Kendra just showed, if you are following us, you'll see that we posted some of that already and on our Instagram page talking about the different sectors. The heat map is what it's called, and understanding when it's red and when it's green. So a lot of people see red as a lot of fear. I was once told by a very smart man, when there's fear, be greedy. And when
be greedy, man.
Be fear. Be fearful.
Hey, man, look, man. That's what they say, man. When it's a sale at the mall, people go.
Yeah.
When it's a sale at the grocery store, people go. But when it's a sale in the stock market, you scared.
Yeah.
Come on, man. All right, y'all. Well, that would do it for our episode 3 tonight of the Administrators Podcast. I hope you was able to kind of get a little bit of information on risk tolerance. If you are a Robinhood user, I hope tonight gave you a better episode of I hope a better insight of what's going on. We will see you all next week. Thank y'all for tuning in. This is KT and
JoJo,
the Administrators Podcast 100.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
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 KTTV.